Hello everyone and welcome to lesson 2.2. I believe it's 2.2. We are going to be talking about the balance sheet today in Fun with Fitzy. Last time we talked a lot about assets, liabilities, owner's equity, and the fundamental accounting equation. Does everyone remember what that is? Assets minus liabilities equals owner's equity. Don't forget that. We're going to be needing that all year. What is a balance sheet? Well, we already know that the balance sheet is a financial statement. And on that financial statement, it's going to list all of the assets, the liabilities, and the owner's equity that we talked about yesterday. Okay? Remember that the assets are what the business owns and have value, and the liabilities are what the business owes. Those are our debts. And once you subtract the liabilities from the assets, we are left with the owner's equity, which could also be called capital or net worth. You must remember that the balance sheet is a financial snapshot. And what I mean by snapshot is it is a particular point in time. So it says here it lists the assets and liabilities of a business on a particular day. Okay, remember, point in time. When we learn other financial statements, they're not all going to be points in time. Some of them will be for the year or for a month. But a balance sheet is always on a particular day because you can sell an asset or buy an asset and your balance sheet will change the very next day. The balance sheet is used by many people all over the world, and therefore it must be consistent in order to be comparable. So all balance sheets show assets, liabilities, and owner's equity. And people who use it, we call those stakeholders, and we'll talk about stakeholders more in this course. But they're going to compare your balance sheet with other businesses. So for example, if you're a hair salon, they're going to compare your balance sheet with other hair salons, maybe if they want to invest money in your business. Or they'll compare you with other industries, or you can compare your own balance sheet with other years. We always must make the balance sheet consistent. Okay, so we're going to talk about the heading first. Okay, the heading always is going to be the name of the business, the title of the financial statement, so in this case it's the balance sheet, and the date. So always for financial statements, I want you to remember this: who, what, and when. I'm going to say that a lot. Who, what, when. Always, always, always is going to be the heading on our financial statements. Who is going to be the name of the business, what is a balance sheet, and when the particular date. So again, we talked about this is what the heading of your balance sheet is going to be. It's going to be on ruled paper. We're going to show you that in just 1 second. But remember, who, what, when. For now, we're going to be using a balance sheet that has two sides. We're going to put assets on the left side of our balance sheet, and we're going to use the equal sign here as the middle. And then liabilities and owner's equity, both are going to be on the right side. Okay, remember we talked about our fundamental accounting equation being assets minus liabilities equals owner's equity. Well, if you move the liabilities over the equal sign, you're going to have assets equals owner's equity, and if you move that over and change the sign, it's going to be plus liabilities. Or if you want to have it the way I have it up there, it's going to be assets equals liabilities plus owner's equity. Okay, here's what a balance sheet looks like. You'll see that there's ruled paper here. Okay, here's our heading at the top, and it's on the lines. Remember, who, what, when, and you will see that there's the two sides that I talked about. Here's the left side, and here's the right. What I want you to do is keep in mind that with this ruled paper, notice that the cents go in this column to the right, and there are 2 zeros. Sometimes we just put a line straight through. For example, if there was a number up here, 850, and no cents, you can just put a straight line through. If you decide to use that line, make sure you're consistent throughout your financial statement. Okay, So we have headings. Assets goes at the top of the left, and remember, liabilities and owner's equity go on the right. Make sure your headings have the same format. In this case, they're all underlined and they're to the left. If you choose to center them, that's fine. Just make sure all three of them are centered then. Okay? Assets, as you know, are things that are owned by the business. They're listed on the left side, and they are listed in order of liquidity. We talked about liquidity in the last lesson. It describes the ease of converting an asset into cash. Okay, so here we have a little problem for you. List the following in order of liquidity. We have car, office supplies, equipment, land, building, cash, accounts receivable. Remember, we talked about accounts receivable, the money that your customers owe you, and inventory. So if we were to list those in order of liquidity, cash is already liquid. So I would say that's first, number one. Accounts receivable would be number two. Supplies would be number three. Equipment would be number four, and so on. Liabilities, on the other hand, is the amount of money that a business owes other people or other businesses. We talked about this in the last lesson as well. They're going to be listed on the right side of the balance sheet, and they're going to be listed in order that the payment is due, called maturity date. Okay, so assets are listed in order of liquidity. Liabilities are listed in order of when you're going to pay them. Owner's equity goes on the right-hand side of the balance sheet. We know about this already. It's the worth of the business. Can be calculated by subtracting your liabilities from your assets. Every balance sheet should be in balance. If your balance sheet doesn't balance, and I'm going to show you this, you've done something wrong and you need to go back and fix it. You cannot leave your balance sheet unbalanced. Okay, so the left side of your balance sheet should equal the right side of your balance sheet. To determine the totals, we find totals for total assets, and I'm going to show you this on the balance sheet. Total liabilities and owner's equity. Those are going to be all our totals. And we're going to also talk about final totals. Dollar signs, they go at the top of every column. So the first amount in every column of the balance sheet. And they go beneath each single ruled line. There are approximately $5 signs on this simple balance sheet that we're learning today. Okay, so let's look at the balance sheet all together, and there's no dollar signs here. Let's put them in. Okay, so we have who, what, when as our heading. We have our assets listed on the left, our liabilities and owner's equity listed on the right, and our assets are listed in order of liquidity. Okay, we have our total assets here, and I don't know if you can notice this, but this is a double ruled line here. Same with your total assets plus liabilities on the side. It's a double ruled line. On the right hand side, we have our liabilities plus our owner's equity, and we total our liabilities here. Just like in math, we put this line across here. Sorry, I can't do this very well. Line across here, and then nothing on the bottom because we're going to add this number here plus this number here to get this number. Again, we have a ruled line here. Okay, so cash on hand, this could be called petty cash in some companies, bank. Notice accounts receivable. There's two people here that owe you money, G. Dale and K. Topper. So accounts receivable in this particular case is a subheading, and there's nothing beside it. Okay, G. Dale owes you $475, and K. Topper owes you $1,350. And you just keep adding them into the total assets you have here. Liabilities, again, accounts payable. This is what you owe others. You owe on-time suppliers, $4,650. And you owe Perfect Packers, $12,780. Okay, so accounts payable in this case is a subheading and nothing here beside the word accounts payable. Your textbook, you will notice, has bank loan first. So we talked about maturity dates. I prefer accounts payable because typically you're paying your accounts payable within a month and your bank loan is ongoing. So either way that you put it, I'm happy with that. but definitely mortgage goes after. And you can notice the keyword here, payable. Payable usually goes with most liabilities. So if you see the word payable, it means you owe money. Receivable means you're going to receive it. Payable means you have to pay it. And your heading here, owner's equity with an underline, and always, 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 and it's hard to see this here, but the owner's name of the company. D, Mattel, comma, capital. Okay? Comma, capital. Owner's name, comma, capital. Always, always, always. And then total liabilities and owner's equity. If you don't have enough room on your balance sheet to get total liabilities and owner's equity on one line, and you have to move and owner's equity down to the second line, make sure that the number goes down with it. Notice this, it says here totals are on the same line. That means this total and this total, and look at that, they equal each other. $270,665 on the exact same row. Very important on this balance sheet. Okay? Remember the double underline that goes there? Single, we sometimes say ruled line instead of under. Single ruled line, double ruled line, single ruled line, single ruled line, double ruled line. Okay?